has the gold become too expensive for the average man on the street? And do you, I mean, it's $3,400 dollars. An average man on the street cannot afford to buy a lot of ounces of gold. So, do you believe that they will buy more silver in the upcoming period as their physical holding?
Yeah, I think you bring up a good point. Typically, not only on the bullion side, but also on the jewelry side. I mean, at this point, I think most people are going to the jewelry store and finding 10-carat hollowed out necklaces. So you don't get a lot for your money, and that will drive people to platinum and to silver. I think more so.
Hello, everyone, and welcome to another edition of Triangle Investor Interviews. I'm your host, Lucian Valkovic, and I'm joined today by Bob Coleman from Idaho Armored Vaults to talk about gold and silver and other related hot topics. Bob, you are for the first time in my show. Thank you for coming today.
Sure, thank you for having me on.
Thanks. We will start with gold, of course. Gold prices plunged yesterday in the biggest one-day drop in years. However, today they are back to the normal levels. Is the record rally over, or we are seeing just a short breather?
Yeah, I think you certainly the last 2 days had a lot of people coming out calling it top. Usually after a big run like this, especially when you see a lot of these issues politically not being solved, you just really have more a sort of a backing off of the tariff talk and so forth. Nothing's you also have the Treasury has been paying down T-bills, so you have had a lot of cash coming into the market that way. So that's given a lift to the markets. But on the gold side, you still see a lot of buying coming in on the London afternoon fix. I mean, that you had about $750 million of gold purchased the other day. So typically when you see that, we may not be over yet. And that would actually be the surprise, I think.
Yeah, how do you think Trump's politics is influencing the price of gold? And I'm not talking just tariffs here, I'm talking the whole thing.
Yeah, it's the uncertainty. Gold tends to prevail in an uncertain environment, and gold again also reacts to fear. That's that's one of the strongest emotions out there. And gold, when it tends to lock in on that fear, you don't know where that thing's going to land. I mean, it trying to stay in front of this. If you're short the markets, you get ran over. The concern is that typically, the safe havens in the past, such as the bond market, has been the place to go to. But as we've seen in this last downdraft in the markets, the dollar's fallen, the bond market's fallen, gold's really been the only one that's been shining, and I think a lot of people are starting to take notice of that, so therefore that buying that tends to come in, especially on the dips. That's what you want to see in a strong market. Not, obviously when you get a short squeeze and the thing goes up like a rocket, it can come down just as fast. But when you have actual fundamental buying coming into the market, that's actually very supportive.
Yeah, like you said, gold price has been on a tear for numerous reasons and factors, such as central banks buying as well, fear of inflation, geopolitics, and fear of monetary reset. Bob, do you see any new factors come into play next to rise the price of gold?
Yeah, I think we're coming into I mean, it's a little bit off topic, but silver, its main lead month contract is May. So you coming into May delivery month, a lot of people are maybe short the contract, taking, that may have taken advantage of the arbitrage and the exchange for physical premium spread trade that a lot of people were involved with the last couple of months. So now the question is, if you're short, are you going to be covering into that, via just buying back your short position, or are you going to actually be delivering metal? And from what I hear, there's still a lot of short position out there that's actually trying to get metal to the exchange to cover that arbitrage that they were trading with. So if that metal doesn't come in, you could see a squeeze starting to develop.
Yeah, good point. So far, when it comes to buying gold in the mix, we have central banks leading the way, but not the retail. Actually, I saw a few graphs. For example, U.S. Mint gold coin monthly sales that actually suggests that the retail has not entered yet the gold bull market. The volumes are still pretty low. Could we see more retail and institutional buying next?
Yeah, that number that you're pertaining to is a little bit misleading in a way because you've had a lot of retail selling back over the last year, and as they've been selling back, gold eagles, silver eagles are one of the most prominent products out there, and so as gold has moved higher in price, you've seen this wave of selling that has come into the market, and what that's done is created a lot of extra inventory amongst retail dealers, wholesalers, and so forth. So they didn't need to go to the mint to buy fresh new coins. They had a slew of backdated product that they were actually trying to return back into the market. So you just, I think that kind of tells you that the retail has been a little bit disengaged, in fact, selling back into the market. So and that continues.
Yeah, great for explaining me this. I saw today that the Swiss National Bank posted the first quarter profit of 6.7 billion Swiss francs, as surging gold prices compensated for stock market declines and the rising Swiss franc. Gold was the star performer for the bank, registering valuation gain of 20.8 billion francs in the 3 months to the end of March. Do you see my question to you, do you see a scenario where banks take a little of profit? I know they do not hold gold as a financial speculation, but nevertheless, the price is at record high. Is this an option? It's a legit question.
Possibly, but most of the time, the central banks are using gold as more of a either a hedge or a filler for their balance sheet in case they have losses on other paper investments. So it as gold rises, it can use that rise to offset maybe drawdowns in other asset classes. You have to understand too, with gold. The Swiss National Bank has already unloaded. Back in the 90s, they had about 27% of their holdings was actually gold, and then they sold it down to about 7%. So I don't know if they're going to sell any more gold, but certainly right now, yeah, if you're a central bank, a lot of central banks will mark to market, but some central banks like the U.S. Federal Reserve and others don't mark to market. So they hold gold at a book value. And so in that instance, they're not recognizing these big gains that maybe some of these other central banks are. But you're still seeing central bank buying. They're still coming into the market. I believe Poland just bought, I think, 3 or 4 tons more of gold last month.
Yeah, Poland is still aggressive. I believe Kazakhstan as well, China, the usual buyers, I would dare to say. Bob, has the gold become too expensive for the average man on the street? And do you, I mean, it's $3,400 dollars. An average man on the street cannot afford to buy a lot of ounces of gold. So, do you believe that they will buy more silver in the upcoming period as their physical holding?
Yeah, I think you bring up a good point. Typically, not only on the bullion side, but also on the jewelry side. I mean, at this point, I think most people are going to the jewelry store and finding 10-carat hollowed out necklaces. So you don't get a lot for your money, and that will drive people to platinum and to silver. I think more so because people do look at these relative ratio charts and so forth, and they see platinum at zero point 0.3 ounces of gold for every ounce of platinum, which is, I think, a historic low. It's never been that low before, in the history of mankind. So I think there is, people can say, listen, I may have missed the gold freight train, but yeah, as this market broadens, I think the white metals start to outperform.
Yeah, you mentioned ratio, gold to silver ratio. I believe today is 100. How do you see that performance going forward?
Yeah, I think at some point it's getting stretched again. We got to see if I wrote a post the other day when we were about 105 to 1 in that if it this is the point it would hold because we were at the 68% retracement on the Fibonacci based on the March 2020 high of 126 to 1 and then it went down to 60 to 1. I think I don't think it's going to stay in the hundreds to 1 ratio for long. But typically what happens is sometimes it can get stretched. So, the real question is we have a gap on the S&P 500 on the futures market well below where we're at right now. We could get another dip down in the stock market that could maybe, send gold higher and potentially, maybe it outperforms silver. You get the ratio bumping up a little bit more. And then it's, at some point though, I think it'll turn over. And when that does, as much as it went to extreme on one side, it's like pulling back on a rubber band. When you let go, it goes to the other extreme just as fast. And I think that's what's going to happen.
Yeah, you mentioned Comex silver deliveries. They are at record-breaking levels right now. How big is the disconnect between the paper silver market and physical market?
It's not too disconnected. You've had really at the beginning of this year when you had the tariff issues and concerns and you had the exchange for physical spread. But basically what that is a spread trade between the New York Comex futures pricing and the London physical spot market. And typically those futures markets tend to have a little bit higher premium because you're dealing with a price action that's sometime in the future. So there's an interest rate mechanism built into it plus the cost to carry. But what happened was with the tariffs, it kind of broke that normal pricing pattern, and the futures raced higher or accelerated faster than the physical market. Well, what's happened is now that the President Trump's administration came out and said that bullion is exempt, what started to happen was the pricing mechanism reversed very quickly back into what they call a backwardation or towards a backwardation, where now all of a sudden the spot market is actually more expensive than the futures markets. And so when that happens, you start to see metal leave the COMEX. And this is something I predicted about 3 weeks ago or so, that you'd start to see that roll of metal coming out of the COMEX going maybe into other markets such as London again, or potentially China or India, where maybe there's a premium to that spot market where it pays to move that metal to that new location.
Yeah. From the technical perspective, do you believe that silver will finally pass that 35 resistance? We had a double top with silver. What's next? How are the charts looking for silver right now?
Yeah, I mean, from a standpoint, silver is still in that sort of longer term channel pattern. I kind of posted on X. What happened was when we had this big drawdown at the beginning of April, we kind of had this flush below that channel, which is very, very typical of silver. Silver is one of those most frustrating metals that tends to give you false breakouts and false breakdowns. And what we ended up seeing was a complete flush. Only lasted for a couple days and then started reverting higher again. And what I was hearing was there were some big players buying $32 call options when silver was in about $29, $30 an ounce. So you see big money still coming into this market expecting that potential breakout. And you're right. 35 is obviously a lot of people are watching for, and that's why if you're short the market right here on the metals, your stops aren't much higher. So if they do want to try to press the market higher, it's not going to take a lot for it to retest that 35 mark.
Yeah, but what trigger or what event or series of events could finally bring silver to $40 level or $50 level? What do you think?
Yeah, typically what happens in that market would be not necessarily the physical just taking charge and people buying physical, which it'll certainly help, but typically what you have is players in the financial markets that typically are short and may have been caught off guard and then rushing to try to cover those short positions. or in the options market, the derivative markets, that can have an outsized effect because you're dealing with a lot of leverage in a very small market environment. So, and typically what you see with a lot of these big Wall Street managed money firms and so forth is they do go into the derivatives markets much more than they do in the physical. So, and that's kind of what's driving the markets a little bit right now, even though there's a lot of physical buying going on in China and so forth. You're seeing money flows coming into the precious metal sector really over the last month or two, and going obviously into the mining sector as well, and watching that mining sector sort of blossom here a little bit just tells you that there's a lot of money coming in.
Yeah, I believe that you get that question a lot. Your price targets for both gold and silver. Do you have any models that can tell you where do you predict the price of gold and silver, let's say in the next 6 months or something like that?
Yeah, I tend price targets are difficult because I try to let the market tell me. But with silver, I think I wouldn't be surprised to see $65 an ounce. Try to silver's really underperformed here. But with gold, I think my thinking would be gold, unlike 2011, gold may top first this time around, and silver may actually top second. Whereas in April, or I'm sorry, 2011, silver topped in April, and then gold topped in September. So you may see, gold kind of peaking out, and then all of a sudden the white metals kind of, they kind of follow the charge up as more money pours into the sector. That's potentially how I think that things could unfold here.
Okay, what about silver and gold miners, especially gold miners? We have a situation, we have a gold at all-time high, and we have some gold companies almost at 5-year low. Where is the disconnect here?
Yeah, I don't follow the gold mining stocks too well. The hedge fund that I manage is mainly all in physical, so it's more. I focus more on the counterparty risk, systemic risk attributes of the metals more so than the sort of the leverage that the mining companies can provide.
Yeah, okay. Is there any other commodities that you are bullish on besides the precious metals?
Um, Platinum is the only other one right now that, from a relative value standpoint, relative to gold, it's extremely cheap. Being that it's about zero point 0.3 ounces of gold for every ounce of platinum. We've never seen that, I think, in human history. You have to go way back on the charts, maybe when platinum was discovered initially, but typically, platinum is about 20 times more rare than gold. So it's a very, very small market. And yes, there's obviously, it's heavily used in the catalytic conversion of internal combustion engines, that type of thing. But platinum is also a peak metal for hydrogen, and sort of that green technology, which I think is up and coming. But the story behind platinum is not necessarily the demand right now. It's more on the supply side, with South African mining companies having a really difficult time ramping production because obviously it's platinum hasn't gone anywhere, so it's they're pretty much losing money mining platinum at the moment. What's happening is you're working off above ground stocks, and I think by 2027 or so, 2028, I think those above ground stocks are going to be fully worked through, and that'll actually give, being that platinum's a small market, could give platinum a nice boost.
Yeah, Bob, how can people reach out to you?
Yeah, I'm on X. The my account is Profits Plus ID, PROFITSPLUS ID, as in Idaho. Our website I run a depository as well as buying and selling precious metals, as well as running a hedge fund. That's goldsilvervault.com. You could find us there.
Great. Bob, thank you for coming to my show. Great chat. Learned a lot and look forward to host you again.
Sure. Thank you very much.